Hello, everybody. Welcome to today's webinar, Budget Planning for the New Year. My name is Meredith Medlin, and I'm so glad to have you with us today. I serve as the Director of Partnerships and Impact for Accion Opportunity Fund, a national nonprofit organization that provides affordable loan capital as well as wraparound business resources to small business owners across the country with a specific focus on entrepreneurs of color and women entrepreneurs. During this incredibly difficult year, this is such an insane year for small business owners, Accion Opportunity Fund is really proud to support entrepreneurs through access to capital and educational opportunities like this webinar. We're really grateful to our partners at Fifth Third Bank for sharing our commitment to small business as well. Today's webinar will help you begin planning your budget for next year. Before you put those numbers to paper, there are some vitally important things to consider about the financial situation of your business. So we'll walk through some of those areas with you today, as well as addressing your questions directly. But before I introduce today's speakers and we begin our conversation, I want to quickly go over a couple housekeeping items. I know we're all much more familiar with Zoom than we were a year ago, but just to make sure all of our technology is working well. First of all, you should be able to view our presentation through the Zoom window on your desktop if you've joined us by computer. Next, if you're on your computer, you will see a chat function in the Zoom black toolbar. So please locate that chat button and type in any questions that you might have throughout the presentation. I'm going to administer a question and answer session following our discussion based on the questions typed into the chat. So feel free to type those questions as they come to you, and we can have a discussion about those as well. We are recording today's webinar, so you can refer back to this information presented at a later time. I'm going to send an email to you containing a link to that recording shortly after the webinar concludes. And lastly, after the webinar finishes up today, you will be prompted to complete a very short 2-minute survey about today's presentation. We really value your feedback, so please do take just a couple minutes to give us your thoughts on the webinar. And now I'm so pleased to introduce my colleague, Philip Henry from Fifth Third Bank, who will share a bit about the bank's commitment to the community before we dive into our discussion. Thank you for being with us, Philip.
Thank you, Meredith. And good afternoon, everyone. I'm Philip Henry, Community and Economic Development Program Officer for Fifth Third Bank. And once again, thank you for joining today's webinar, Budget Planning for the New Year. This is our 6th small business webinar of 2020 in partnership with Accion. Our commitment to put business customers at the center of everything that we do is a driving force behind our ongoing collaboration and partnership with Accion. Together, we share a common goal, and that's helping entrepreneurs overcome barriers and achieve business growth by expanding access to capital and educational resources. Fifth Third Bank, in collaboration with the National Community Reinvestment Coalition, made a commitment to invest $32 billion into the communities that we serve through 2020. The plan was originally announced as a $27.5 billion commitment in February of 2016. It expanded to $30 billion in November of 2016 and expanded once again in October of 2018 to $32 billion to reflect Fifth Third's expansion into the greater Chicago area. We have exceeded our commitment with significant help and engagement with community and business partners such as Accion. As you can see from the slide, we have completed the 5-year plan with $35.5 billion in lending and investments to improve lives in low and moderate income communities throughout our 10-state footprint. We have committed $13.8 billion in mortgage lending, $11.1 billion in small business lending, and $9.3 billion in community development lending and investments. As you can see, Fifth Third Bank is committed to all of the markets that we serve. Several hundred entrepreneurs have been helped through our support of economic development programs, including technical assistance and micro-lending for small businesses through partners like Accion. If you're launching your business or expanding it, our team at Fifth Third and our resources are available to you every step of the way. Please visit our Business Resource Center at 53.com and let us help you meet your financial goals and assist you with smart financial solutions for both your personal and business needs. Thank you, and back to you, Meredith.
Thank you so much, Philip. We're so glad to be a part of this partnership and really appreciate the bank's commitment to small business. So now I am very pleased to introduce our speakers for today's conversation. So first we have Marcia Beckering from Fifth Third Bank. Nice to have you with us, Marcia.
Good afternoon.
Next, Abigail Scanlon from the Women's Business Development Center. Thanks for being here, Abby.
Good afternoon, everybody.
And last but certainly not least, Ed Timberlake from Fifth Third Bank. Thanks for being with us, Ed.
Thank you for having me, and welcome to everyone.
Wonderful. We're so pleased to have the three of you with your diverse levels of experience joining this conversation about budget planning. So we'll go ahead and get our conversation started. So first, we'll discuss the current financial situation for the business owners on the line. So Marcia, can you explain how business owners should be evaluating their options depending on their recent changes in revenue?
Yep, absolutely. So one thing that I think we need to realize is that sales don't necessarily translate to profitability. So not only focusing on your sales levels, whether they're increasing or decreasing, is just as important as focusing on, the bottom line, your profitability, because it's going to translate into cash. So for us, for what we look at, and one thing I think is very important is, regardless of which way your sales are going, it's really important to have a strong expense management strategy. So that way, as a small business owner, when you're faced with an adverse time, like currently what we're dealing with, you're able to pivot. So I'm going to run through a few examples of what we've seen some of our clients do during good times and in bad, on how they manage their expenses. And it's not a one size fits all strategy. It really does need to be tailored based upon your business, your industry, where you're operating in. But these are just some suggestions of what we've seen. So one of them are taking a peek at your expenses and seeing if any of them are discretionary or unnecessary. These are expenses, honestly, that are easy to eliminate or suspend for a certain period of time if necessary. So things we've seen are advertising, travel and entertainment. That seems to be a big one lately, just given the restrictions in place across the country. Other potential discretionary expenses we've seen that have been suspended are 401k matches, which sounds somewhat harsh, but a lot of our small business owners have done that in lieu of potentially reducing their workforce. And then they're able to reevaluate that and begin that again when necessary. I think it's also really good from any type of ongoing management strategy within your company to do an annual review of your suppliers and your vendors. And you'll want to do this for a few reasons. One is, there might be options that are out there for a different product or service through a different vendor or supplier at a lesser cost. And additionally, depending on how your relationship is with your vendors and suppliers, if you find yourself in tough times where you are in a cash crunch, reaching out to your vendors and suppliers to work with them on things like payment terms, discounts, even pricing changes, they're more apt to work with you just by picking up the phone and having those conversations. One other option is get really creative with your expense management, which sounds kind of odd. It really depends on the industry, again, that you're in. One thing we've seen some of our clients do is they manage how their staff and their workforce work, which again is kind of brought on due to COVID, but they'll do things like reduce shifts. If they're a manufacturing firm, they may have gone from 3 shifts down to 2 or down to 1, which was driven by their level of sales. Something else we've seen are allowing employees the flexibility to work from home. That's kind of happened a lot this year, which has been really great for a work-life balance, depending on where you live, I guess, for the employees of those clients as well. So then without having, a full staff in the facility, in the building that you operate out of, you're also reducing costs that way. Look at perhaps selling obsolete inventory, because holding inventory on your balance sheet, depending again on the industry that you're in, is a use of cash. If you're not selling the inventory, you're not converting it to cash. If it's stale or obsolete, that's one way to kind of help manage that as well. Another thing to look at is, are you overspending when times are good? And this kind of goes back to that discretionary expense. I'm going to use the inventory example again. I used to have a client that would buy large lots of inventory at a deep discount through companies that were liquidating, which necessarily isn't a bad strategy, but you want to make sure that you're able to turn that inventory into cash, which means you want to sell it, because if you're holding it on your balance sheet, like I said before, that's a source or a use of cash. You want to convert it to cash. Another common thing, and you're going to hear this theme kind of throughout the next couple of slides, is have an open line of communication with your creditors. If you currently borrow and you find that you're in an environment with reduced revenues, just keeping your creditors, your lenders up to date on the performance of your company is key. And the reason why I say that is that way, if you need to refinance debt, if you need access to additional financing, it's a lot easier when you've already kind of had those conversations with your creditors prior to asking for it. So those are just a few really just high level of examples, again, of how to manage those expenses with your expense management strategy in an environment of when your revenues are increasing or decreasing. And again, remember, it's not a one size fits all. It really needs to be tailored based upon your small business and what your needs are. So I'll pause. If there are any questions, you want to put them in the chat and we can take care of them at the end. If not, then we can carry on to the next slide. Or if anybody has anything else they want to add.
Yeah, thank you so much, Marcia. I think that's a really important way to conceptualize of these issues around, it's not a one size fits all for the business or the business circumstances, right? You know, it's those things change. This year has been really volatile, and what might have been an effective expense management strategy in April might not make sense anymore because we've been in this so long. So I think that's really great advice. Thank you. And your last point leads us perfectly into our next concept here. We want to talk about access to credit. And, you know, you're saying to be in great conversation and open communication with creditors. But can you help us think through a little bit more specifically around the access to credit and how business owners can be thinking about the credit or the debt they might be able to access this year?
Yep, absolutely. And it's been a challenging year, and it's been really interesting because either COVID has negatively impacted our clients, or we've had some where it's actually been a positive impact on their business. So I would say currently right now, if you're in the position where you find yourself over leveraged, and this honestly, again, is not just specific for when you are over leveraged, just in general, I'm going to go back to say, always stay in constant communication with your lenders and keep them up to date on their performance. Again, when you're in a situation where you're in a downturn and you are over levered, your creditors, your bankers, they can help you in terms of refinancing debt so they can get you into a payment that's a little bit more easy to manage for your cash flow at that time. They could look at potentially changing the timing of your payment for you. Something we did for a lot of our clients this year is we offered payment deferrals, especially given where their business is located. If they were shut down due to state mandate, obviously then you have no revenue that you're generating, you just have cash on hand. So the bank, we did 90-day deferrals for a lot of our clients. That helps as well. Something else I think is really important, and this again just isn't only for when times are bad, is it's kind of a common sense thing, but you'd be surprised, is continue to make your payments on time. One thing that makes it really challenging for a small business to come back to the bank and ask for additional financing is if you've constantly been delinquent on your loan. So staying on top of that is important. And again, if it's something you can't stay on top with, it goes back to having those conversations with your lenders and making sure that they understand what's going on so that we can help you. One other option on attempting to delever is if you have revolving debt. Revolving debt is like a line of credit, which is used for short-term needs in nature. You'll want to look at revolving that debt and utilizing how it's supposed to be, because if you have a permanent balance on it, or a balance that has always stayed the same and has not moved in a long-term time, so if you're looking at over 12 months, we look at that as permanent working capital, and then the line really wasn't used for what its initial purpose is, which is short term. So again, trying to reduce that revolving debt exposure will only help you in the long run in reducing and delevering your company. And then again, if you're with your line of credit, because it is short term in nature, it's a source of cash. You're supposed to use it when you need it for purchasing inventory or for working capital. And if you're holding permanent balances on it, you're challenged, then you're challenging yourself so that you're not able to use those funds when you do need to access them. So those are just a few items that you can possibly look at doing if you're trying to delever. On the flip side, if you find yourself in a position where you do have a wider access to credit, this is great, right? This gives you the opportunity to look at maybe potentially expanding your business if necessary. Is this the time to look at investing in additional capital expenditures? Meaning, do you have equipment that you're currently utilizing that's a little obsolete? It's a little old. Maybe now is the time to look at upgrading this equipment, which in the long term is cost effective and can potentially make you more efficient. We've had lots of clients lately that have been upgrading their software. So it might be like their payroll software, their accounting software, inventory management software, whatever it may be. They've invested in that. So in the long term, in the long run, they can look to be more efficient and be more cost effective. I think really what it boils down to, though, is knowing what your borrowing needs are, because as the banker, I don't know what your borrowing needs are. I can always make suggestions on what I think you need, but as the small business owner, knowing really what you need over the next 6 to 12 months and being able to articulate that with your bankers is really will put you in a better position to gain access to additional financing if you do need it.
Excellent. Thank you so much. And then this last point that's on the slide here is very specific to this year, because there have been just so many challenges that governments and other entities, city, local, state, all that, have been looking to help businesses recover and sort of survive this time. And so, Abby, I'm wondering if you can help us think about the credit implications of receiving some of that relief.
Yeah, absolutely. So there's just a few other things that you want to take into consideration going into the new year. And this is something you definitely want to, bring your accountant or CPA into. One is, I think a lot of people may have forgotten that this is the money that you may have received from the government or any kind of grant programs, locally or et cetera. Those that grant money or those funds will be taxable. So you want to definitely touch base with your CPA and accountant to see, what those tax implications are and how you should, file your taxes for 2020. So, because obviously that's going to perhaps impact, what you may owe or et cetera for the upcoming year. And then obviously if you need to break down any payments for money that you owed, you need to incorporate that as an expense more or less. And then additionally, because so many people have, or so many businesses did take advantage of the EIDL SBA program, that's the Economic Injury Development Plan. But with that one, a lot of people did get a UCC filing against their business. So you definitely want to check and see that if you received the EIDL funds, that you, check your UCC filing with the Secretary of State, for whatever state that you do business in. There could be a filing against your business. And with that said, in order, if you need to do some additional capital or you need some other additional lines of credit, et cetera, that could impact your ability or your capacity to get more loans and funding.
All right, that's so important for this year. And so thank you for walking through that. That's sort of a special consideration for this year that, depending on how things go the next few months, might be something we have to think about again next year as well.
Yep.
But thanks for walking us through that, Abby. And so we have a couple quick questions in the chat I want to pause to answer before we move on. Just quickly, Abby, can you elaborate on UCC? Do you know what that stands for?
Yes, that is the Uniform Commercial Code, and that is a legal notice that a lender will file with the Secretary of State against the business assets and the business. So typically most lending institutions, if you take out a line of credit or some kind of lending product with an institution, they will typically do a UCC filing against your business, right? And so with that said, before you take out a new line of credit, the lender, if it's a new line of credit, for instance, the lender will actually check to see what UCC filings you have. So essentially, it's kind of like, if you think of it from like a personal level, it's kind of like the recording of a mortgage on your home. So it's similar to that. That's what the UCC filing is. And for most businesses that did receive idle funds, the SBA did put a UCC filing against their business for that loan.
All right, that's very important to know for sure. Thank you for explaining that for us. And then, Marcia, I'm wondering if you can help us with a question that's in the chat as well before we move to our next topic here. Somebody is wondering about any tips or best practices you might have in mind for transitioning to higher levels of credit access despite this really difficult and uncertain time.
Yeah, so it's hard to answer that from a very 10,000 foot without asking details, because I'm a detail-oriented person and I'm the credit person on our end. But I think for starters, having conversations with your banker is key, because they can help walk you through what the borrowing needs are, right? So if they're short-term or long-term in nature, I think that's a good step in the right direction. If conventional financing isn't an option, something else I just realized we didn't call out. So we talked a little bit about the PPP funds through SBA, as well as the EDIL, EIDL, I think, Abby, is the acronym. But those are two additional options. But additionally, depending on the state you're in, each state, maybe not every state, has additional grant programs that they offer. So that's another opportunity to explore as well. Here up in Michigan, that's where I'm located, we have something called the Michigan Economic Development Corporation. I believe that's what it is. It's MEDC, and they offer grants and loans to small businesses that are located in Michigan. After having those conversations with your bankers, I think a few good points to keep in mind are you're going to want to do your due diligence before you have those conversations. So having current financial information and a good high-level summary business case of specifically what you think you need and why, that's always helpful, and to start those conversations, because depending on the risk profile of the company, we may not be able to get you everything that you specifically ask for, but normally there's a compromise in there to get you something that we think that you'll need, that you'll use to get through whatever that particular time period is. So I know that's a very vague answer without going into detail specifically on what your borrowing needs are for your particular company, but hopefully that gives you a little bit more guidance on that. If not, then we could probably try to expand further.
Yeah, I think that's really helpful. Both, if you're trying to access more credit, especially it's a difficult time, and businesses' risk profiles might have changed over the course of this year because of the difficult time, but getting creative and looking into other options other than traditional bank lending I think is certainly a great suggestion. And then also it never hurts to be prepared, for those conversations. So thanks. Anything to add, Abby or Ed, on that point?
Yeah, I just want to add to, I mean, this year has just been, for lack of a better phrase, kind of insane when it comes to the credit world, because so many businesses had to absorb some level of capital, whether it was through a grant, or maybe if they were lucky, they got a PPP, or they got some additional funding through their banks, right? But the one thing I will say is with all of these different entities, talking to businesses, some of these entities did pull credit. So I highly, highly recommend, as you're planning out the 2021 year, before you go to your lender, I always tell my clients, you absolutely need to understand what's on your credit report, right? And it's your personal credit. It's not necessarily the business credit. Like, yes, the business credit does play a big role, but for a lot of the institutions, and even myself as a nonprofit that has our own lending program, we still evaluate personal credit as well. So you definitely want to pull your own credit, and you can do that free through annualcreditreport.com or other platforms out there like Credit Karma and etc. And a lot of people's credit cards also offer this, but you definitely want to just take a look. How many inquiries do you have showing on your credit report right now? Are your credit card balances maxed out because you had to, pay some other bills to the business via your own personal assets, right? These are the things you want to evaluate so that you are prepared to, talk to a lender if you need, or if you, see that for the upcoming year, you're going to need some additional capital.
I think that's such a great point. Thank you, Abby.
Yeah, and Meredith, this is Ed. I'll jump in just to kind of chime into what's already been said. I think that another thing that this year has taught us, which is probably obvious at this point, but when it comes to having those lines of credit and that sort of thing in place, it's one of those things that you need to have had that in place, because again, coming to a bank or a lender during a pandemic to seek additional funding is going to be a lot tougher. Again, there are some businesses that have thrived during this pandemic, and that's fine for them. But some of the businesses that have seen a downturn and need a little extra help, even outside of some of the government relief programs and grants that have been out there, those lines of credit are something that you should have had in place, just as your safety net. And I'll also add to that by saying that, a lot of times with the business owners that I've come into contact with, a lot of times business owners are afraid to seek debt, and they choose to, kind of fund their businesses just using their own money, their savings. And so I think this is a great example of, it's okay to use a bank's money. Of course, you have to be mindful of the way that you do that, and you have to be strategic about it. But there are a lot of businesses that probably started up within the last 3 years or so that, use a lot of their savings when they could have, financed some of that stuff and left money in the bank. And so I just think that this year is an important reminder that, you do need to make sure that, your business has savings, that you have kind of that reserve that you can tap into for moments like this.
I think that's such a great point. Just thinking about all the different levers that you could pull, and being really prepared to look at the whole landscape, and not just using your savings because that's what you feel comfortable with, but being willing to have those conversations about what other options might be available. I think all of these factors, with its the pieces of credit or relief money or savings, they all have such a huge effect on a business's ability to plan the budget, because you're going to have to pay back the money, you're going to have to consider the tax implications. So thank you all three so much for helping us kind of set this stage for understanding the current situation of the business. And now I think we're ready to transition to our next piece, which is just around managing what's going on day to day. We like to, in a perfect world, talk about sort of forecasting or planning long term, but with everything that's going on right now, I think it's much more practical and and applicable to think about what's actually happening in the day-to-day management when it comes to figuring out a budget. So I'd like to turn to these first couple points here. Marcia, can you walk us through sort of what folks should be focusing on for that day-to-day management?
Yeah, absolutely. We've actually started working with our clients a lot more just this past year on their cash flow management, which is kind of counterintuitive because you would think we would be doing more of this, but we haven't. And this is a really great tool with the timing of the inflows and the outflows of your cash, because cash is king. You need cash to manage your day to day. So really what we've been working with our clients on is something called a 13-week cash flow, which is just a tool. It's a management tool that is a living document meant to be used ongoing throughout the management of your business, not just in good times or bad, but it really does help focus on your cash inflows and outflows. So your inflows are sales, right? You know, whether it's an accounts receivable or it's a sale transaction, point of sale if you're selling a service, like if you are a restaurant and it's the bill that gets paid. So those are some of your inflows examples. Your outflows are, you know, your rent or your debt payments, your payroll, purchasing inventory, et cetera. Those are your outflows. So what we ask our clients to do is look at all the inflows over a certain period of time. Let's just say it's typically on a weekly basis, pair it up against your outflows, and you put it into this really nice report document in order to see where your cash flush or you have a cash deficit. And then from there, as a small business owner, you get a sense of the timing of it. And then you can start to see where you can try to either collect those inflows faster. So for example, and this kind of goes back to when we've talked about expense management strategy. If you have accounts receivable and you notice that the timing of the collection of the accounts receivable continues to stretch. So maybe it used to be 15 days. Now it's 30 to 45 to 60. So the longer that stretches, it delays you collecting cash. So how do you manage through that? Do you have the accounts receivable protocol in place or a strategy? How often do you look at that, or do you not? So maybe that's something that you need to think about, because the faster you collect your AR, the quicker you get cash. And then conversely, the same thing with your payables. If you are collecting your AR, let's say every 60 days, but you're paying your payables every 30. So you're paying twice as fast as you're collecting your cash. So can you stretch some of those payables? This is kind of where we've talked about the timing of this. That's why this cash flow management tool that we're talking about really does help you see those peaks and those valleys. And we have a lot of clients that now that they know how to do this, and it can be as very simple or as complex depending on the business, it's been a good tool for them, because then they can come to us and say, here are my peaks and valleys. This is where my borrowing need is out here in week 10. Can we start talking about a strategy to get in place so that maybe we can get us a short-term line of credit so we can get through this cash flow valley over here.
That is so smart. And having that really strong sense of the timing, you know, it helps you, like you said, identify capital needs, but it also helps you identify potential opportunities. You know, where does this fit in I know this expense is coming up. I have to fit it in the budget somewhere based on this timeline. And when my payables are coming in, I can do it at this time, you know, that kind of thing. So I think that's really, really smart. Thank you, Marcia. We have a question in the chat wondering if that cash flow management tool is available somewhere, maybe on Fifth Third's website, or is it just a very simple sort of like a chart that folks can put together on their own?
Yes and no, and yes and no. So it can be, yeah, right. So you could Google it and see what templates are available out there. It's Excel based. It's really as simple as your beginning cash plus your inflows less your outflows for that week to see what your ending cash is. We do have one at the bank. I need to take a peek at it to see it. I don't believe it's proprietary. I believe we can share it. I don't know how complex it is. But what I can do as a takeaway, Meredith, if this is okay, is I can I can research that a tad and then get you some feedback, hopefully by the end of the day. And I don't know if that's something you're able to distribute out then.
Absolutely. Yes, I can add it to our follow-up email if it's
Wonderful.
available. That would be perfect.
Great.
Thank you, Marcia.
You're welcome. Happy to help.
Great. And then so our next piece that I know we've touched on already, but just in terms of that day-to-day management, Abby, can you speak a little bit about that communication that might affect that day-to-day cash management?
Yeah, actually, I love that transition because kind of going back to what Marcia had said earlier, that the communication with your bankers, that is so crucial right now. I know it's kind of tough. That's the other question that I usually get as a follow-up to that statement, right? Well, everyone's so busy. They will be busy, but definitely try your best to make an appointment with your current banker or whatever your home branches, because now is a really, really good time to evaluate the products and services that you have with the bank, so that you can potentially increase your cash flow, right? In this day and age where there's not a lot of contact with people, perhaps adding some products and services like merchant services for credit card payments or having ACH deposits, things like that are definitely, anything electronic basically, right? Like that's gonna, definitely have a great impact on the timing of your capital cycles and increasing your cash flow, so that you can get more money in the door, right? So it's so good to just have that open communication with your bankers. And then additionally too, like if you have any vendors or credit card folks that you have partnerships with, definitely have that open communication, because it's kind of a domino effect, right? Like as long as you're able to work with them and they're aware that you're still committed to pay, that's always the thing. Like if we don't hear from you, then people start getting nervous, right? But if you always have that constant open communication with people, then they know that you're still going to pay them back, your creditors, your vendors, et cetera. It just opens up that line and it gets everybody feeling a little bit better about the cash flow cycle. Customers too, right? Like maybe you can perhaps work out different contracts with some of your clients. I know that's another thing that a lot of businesses are doing in these times where they have to pivot, right? Like they have to be very direct with their clients and let them understand, hey, I'm a small business as well. We may have to, restructure our contract a little bit so that I can do a lot of the business, for you up front. It doesn't mean that you have to necessarily tell the client that I have to have 100% payment right now, but I know a lot of people don't collect a lot of upfront money from their clients, right? Because they're usually waiting for the project to be done. But sometimes you can, right? Like work with them. I just think that open communication is definitely going to, give you a chance to evaluate your cash flow and then, also manage your expenses too, because you have a payroll to cover, but you also have people to pay yourself in terms of creditors and et cetera. Hope that makes sense.
Absolutely. Yeah, definitely. And lastly, Ed, I definitely want to bring you in here because I know that you work with so many customers that really make the most of the tools the bank has to offer, and then also other partners and community organizations. So I'm hoping you can share a little bit about how business owners can make the most of the resources that are open to them.
Yes, I think that, I think Abby just mentioned this, but, we're moving into a place where more things are going to be automated and electronic. And so understanding the treasury management tools that are available to you through your lending institution, I think is going to become increasingly important as we not only finish out this year, but move into the years ahead. And so, Fifth Third, we have what we call our Fifth Third Direct online portal, which allows business owners to be able to do a lot of things so that they can control that their cash management. Because I think, as Marcia said, cash is king. And so some of the items that we offer through our treasury management program is expert AR receivables matching, which really makes it easy for your back office team to identify those inflows that are coming in, so that you're making sure that, or you're monitoring, when that cash or when those receivables are actually turning into cash so that you can make any adjustments that you need to. We also have a solution, real-time payments, where instead of something sitting on your book as a receivable, if somebody pays you through ACH or through a credit card, those funds can be deposited into your account all in the same day. I think that, again, people taking advantage of, the merchant services that we have, the credit card processing is going to, continue to become increasingly important. I don't know if any of you saw this, but I this year, while out at a couple restaurants, there were some restaurants that wouldn't even take cash at all. There was a cash shortage at one point with respect to coins. And so I think all of those are indicators of the world that we're moving into, whether we like it or not. And, we're going to have to learn to take advantage of those items. Another control that you can put in place when you use some of our treasury management products is controlling your payables and really allowing you to identify how much money is going out. I think one of my fellow panelists mentioned before that, you may need to reach out to your vendors or research or review your vendors to see if there are products and services that are maybe a little more cost effective. And having controls in place like that allow you to print a report that can show you, well, how much am I spending on this particular vendor? Makes that process a whole lot easier for you to be able to try to find those cost-saving programs or find ways to cut costs. I mean, as a small business, we always want to try to make sure that the business is as lean as possible because, there's not a lot of cash just lying around. We also offer a commercial card program or a purchase card program, which again allows you to be able to, if you have a business where you have employees that have expenses, and in some cases, businesses will get individual credit cards for their employees. But with our purchase card program, you can monitor your employee spending in real time on one platform from one site. And if you have an employee that you give a certain spending limit and they're approaching that spending limit and you need to increase it a little bit, you can do that in real time. You can also decrease in real time. But again, just putting controls in place that are going to allow you to see exactly, what you're spending money on, what you're spending time on, and, what you can do to, save time, save energy, save effort, and most importantly, save cash. The last thing that I'll talk about, we talked about having monies in the bank. Another product or service that our business owners can consider are sweep accounts, which basically turns excess balances into investment income, whereby, when you have an additional amount in an account, it sweeps over into another account and you can start to build those monies up. So those are just some of the items, some of the suggestions and some of the things that we should be thinking about as we're moving forward.
Thank you so much, Ed. I think it's really important for small business owners to realize how many tools and services are available. I know a lot of the clients that I work with feel overwhelmed with this sense of having so many priorities and needing to have a very close eye on the finances, and being very hands-on with those finances is so important. And so it's really helpful to know, it's a little bit of a relief that there are services that can automate some of those pieces so that folks don't have to spend day in and day out, in an Excel workbook or with all of their receipts. There's ways to automate to kind of lift some of that burden. So I think that's really good news. Thank you for sharing.
And just to talk about some of the community partners that I work with, I'm in our Charlotte market, but I work throughout North Carolina. But we work with our women's business centers, who I think they are a valuable resource. And one of the things that, for the gentleman on the phone, some of the women's business centers will work with men. So don't let the name deter you. Then you also have the small business centers that are in most areas at community colleges. Then here we also have the small business technology development centers, may have a slightly different name depending on where you are. And then another tool that I want to say, just like, with Accion, and I thank you guys for putting this together, understand too that lending is not one size fits all. You know, as a small business owner, you need to understand, you know, where you are in your business life cycle. So for example, at a bank, typically we want to see that a business has been around or for at least 24 months minimum. You know, of course, there are always exceptions to the rule, but sometimes going to a CDFI or a community development financial institution, which is a nonprofit lender for those of you who don't know, a lot of times, since they are not regulated the same way that banks and credit unions are, they're able to have a little bit more flexibility with respect to their underwriting criteria. So, you know, again, there are lots of resources for you, no matter what area you're in. And I think that you should, you know, look into these resources, because I've noticed that a lot of times I get quite a few referrals from our Women's Business Center here in the Charlotte market. And I can tell the difference in the strength of the loan packages, that the way that they're put together when people go out and seek that assistance. And the last thing I want to leave off by saying, you know, again, because we were talking about cash is king and you know, trying to run your business as lean as you can, I want to also let you know that a lot of these services that I just called out, your Women's Business Center, Small Business Center, Small Business Technology Development Centers, all of these sources are free. And actually, I want to change that. I don't like to say free because sometimes people don't see value add when you say free. These are all prepaid resources that you've already paid for through your tax dollars.
Yeah, that's a great point.
Thank you, Ed, for that wonderful plug. Coming from the Women's Business Development Center in Chicago, that is definitely 100%. I back you up on everything that you just said. It is, we are mostly nonprofit organizations that your tax dollars have already covered for in terms of expenses and such. And we do help everybody. It's, you know, I know for me, it's not just women that we help every group that's out there. And these resources, it spans, you know, I help business owners put their loan packages together, but then I also help them evaluate their cash flow and, you know, maybe create some other ways to increase their cash flow. And then in addition to that, our center also offers an evaluation of your business plan, which is so crucial going into the new year. I think everybody needs to kind of take a hard look at both their financial statements as well as, you know, goals for the upcoming year and their business plan, and, you know, just to take a look at it and see what they want to accomplish after this very challenging year.
Yeah, that's a great point. Thanks so much, Abby. All right, so next we will move to our sort of last point of discussion today. I know it's very difficult to think about long-term future scenarios because we don't know what the end of this week's going to look like, much less the end of next year. But I just wanted to give all three of our panelists a moment to speak to this concept about the long-term budgeting or financial effects of everything that has happened this year. And if there's any pieces of advice that you'd like to share about how to think about sort of, even though we can't project exactly what's going to happen revenue-wise next year, any advice you have for what we can maybe look for, or how we can expect what's happened this year to have that long-term effect. So Marcia, I can start with you. Any advice on this point about long-term effects?
Yeah, I would say after this year, it's really challenging to project what's going to happen next year, given we're kind of in our second resurgence of, depending on where you're located in the country with COVID, and who knows what the next 3 months, 6 months, 12 months will look like. And I think once life returns back to whatever the new normal is, it's going to take time to return to what we think that normal looks like. So I think the best strategy right now is a 12-month forecast. I think is pretty daunting, just given the uncertainty of the next, handful of months. I think as you're planning for next year, if you can look in the short term in order to think about the long term, I think that will be helpful. So when I say that, look in 90-day increments or quarterly increments. Start with the first quarter. Once you get halfway through first quarter, then look at the next 90, then the next 90 after that. And if you think in these short-term spans, I think over the long term, you'll find yourself having success. And then I also think being flexible, given this time of uncertainty, will be critical as you're moving through the future. We really don't know what's going to happen. So just being able to pivot, that's like the biggest tag word this year in banking, it seems like, will help you manage through, I think, a little bit better. And then again, communication is key. So Abby and Ed both had some great additional resources for different nonprofits that you can reach out to, which I think is also a viable option. Keeping in contact with your banker is important as well, your CPA, to know what's going on, especially with PPP forgiveness and how, if there are tax implications with that, what those will look like, will really help you plan better for as you work through 2021.
Fantastic. Thanks, Marcia. Abby, anything to add on that point?
Yeah, no, I really liked the fact that Fifth Third's got a 13-week cash flow tool out there. I agree. It's so hard to kind of evaluate 12 months, but, take it quarter by quarter. Obviously, everybody has, a goal for 2021, but breaking it down by chunks is always the best strategy. And then also, too, in terms of absorbing capital, I think somebody had asked, this is kind of like a twofold question, but is there going to be additional money that's going to be released? I don't really know the answer to that, but if you are still in an area where they still are offering grants and lower costs to some money and some capital, I would definitely take advantage of that. And then also see how that money is going to help you out. You want to be strategic, right? Basically, with any kind of money that you absorb, right? Because everyone's goal, I think, for the last year and then maybe going into the first quarter of the new year is going to be to keep their lights on. I think that's kind of the philosophy that the SBA has been kind of hanging on to, right? We want to keep the backbone of America's businesses, these small businesses, open. We want to keep their lights on. So, being strategic with the money that you do receive, that's the other thing that I would, I would want everyone to think about. And then, just if you need the assistance, just come and see all of those different resources that are out there too, if you think that you're struggling or you can't wrap your head around it.
Absolutely. Thanks so much, Abby. And Ed, anything to add on the sort of planning and long-term effects question?
Sure. So, I think both of my co-panelists covered it well with respect to, trying to get your budget under control. So I'm going to go in a slightly different direction. The thing that I would say that this year should have taught a lot of us is monitor your overall business model, because you may be in a place what this year has taught us. And as we, kind of try to figure out what the new normal will be, I think, as Marcia mentioned, maybe there are tweaks that you can make in your business that's going to make your business more viable. Maybe there are shortcomings that have been identified by this pandemic that you can make, some viable changes. Is there a way for you to diversify your revenue for your business? And then the other thing is, are there any partnership opportunities for you and your business? And I know sometimes with some small business owners, they kind of cringe at the idea of partnership opportunities, but I'm of the belief that I would rather own 50% of a business that has net profits of $500,000 than to own 100% of a business that has net profits of $30,000. So, are there any strategic partnerships for your business in the coming years? Are there any tweaks that you can make to that business? So, again, my final thought would be, just analyzing and really and truly reviewing your overall business model to see if there are tweaks that can be made.
Thanks, Ed. I think that's such a good point, because all of these concepts are so interrelated. If you're trying to set up a really strong budget with a business model that was broken by COVID, you're going to have to take a step back and look at the broader issue. So I certainly appreciate that point. I think that makes a ton of sense and it's really smart. So now, with a few minutes left, we're going to jump to a couple of questions. So folks, I encourage you to type your questions into the chat box if you haven't already, and we'll take a few of these with our remaining time. I feel like I've learned so much already today, so thank you to our panelists, but we'll keep those questions coming. So the first question I want to turn to has to do with keeping the markup. So Michael in the chat is an independent contractor who has a 20% markup and is hoping to save that markup, keep that savings and possibly invest that back into the bank. Marcia, I'm wondering if you could help Michael and anybody else who has kind of this similar situation think about how to keep that, sort of maintain that profitability level going into next year.
So that's tough. I guess one of the first questions I would want to know is, with the 20% markup above retail on materials for your projects, is if it's industry standard, it's one thing, or are you like tied into one specific supplier for those materials? So is it possible to explore additional suppliers to get those materials for your projects where maybe the markup isn't as steep? So that's an option to kind of explore. And then an additional thing is, I don't know specifically what you do, but can any of that markup that you incur for those materials be passed along to your customer for the work that you're doing? For example, I know I have a lot of construction companies that I work with, and there's been quite landscaping. Okay, this might go hand in hand. And then I'm thinking, do you do like snow plowing too? I don't know where you're located. So do you just do landscaping in the summer and then snow plowing in the winter if you're in Michigan? So if you're stuck with one particular supplier that's hard, then my next suggestion would be, can you pass over to your customer as you're working through? Oh, you're up north. Hey, fellow Michigander. Sorry. Yeah, so it's harder because you're further up north, right? And so your access to suppliers, given your location, is probably challenging. Whereas if you were further down south in the mitten, you might have access to different suppliers. So try that, see if that's possible. If not, then again, passing it over to your customers, because honestly, that's the cost of doing business when you're in that industry. And then I don't know how much competition you have up where you are. So if you're like the one and only landscaper, which I doubt you are, but if you're one of a few, that's good, because then you're hopefully there's some competition there where maybe you're beating out your competition. Do you have a banker already? Like, are you currently a client with Fifth Third? I'm so sorry, I'm just hijacking this
No.
questions. I might tell you just to email me separately, and I can get you hooked up with someone up north to chat with from a banking perspective. But I don't own a small business. I'm just married to a small business owner. So he and I talk about stuff like this a lot. So those are kind of my first two suggestions for you. Great, good. Lori Reichard and Amanda Cousins are two of our main small business lenders up in Northern Michigan. I think Amanda's in the Traverse City area and Lori's in Petoskey. So those are two people you can always chat with too about lending needs as well. But from the markup, like I said, see if you can change suppliers. I'm booked out until that is awesome. You're booked out until September next year. Oh my gosh. Sorry.
No need to apologize. That is really great, especially in a year that's been so difficult. So it sounds like you might be able to diversify maybe some of your suppliers to get some of those costs down, or change your cost structure potentially if some customers haven't already signed contracts all the way through September, to help kind of save on some of that markup. Thank you so much, Marcia, for your expertise on that question. And it's great to make that connection, the regional connection for sure. And so we have one more question, just really quickly, that I want to answer before we sign off today. And then we'll be sending you resources and a recording of this webinar back later today. But we have one person who is having a cash flow problem related to vendors not paying on time. And so I know we spoke about this on kind of the cash flow management piece, but any advice to kind of help somebody get creative when their vendors or customers are not paying on time?
Yeah, so possibly looking at some of those cash management tools that we have in place. One thing could be to, try to put a line of credit in place if you don't already have one, so that, if you have to tap into that line of credit while you're waiting on payments, that's one option. Another option, I think someone might have mentioned it on the call, is with some of your vendors or those people that you're waiting on that money to come in. Are there any specialized pricing or incentives that you can put in place to inspire them to get you your money a little faster, so that that's not an issue? So I would tell you to go and sit down with whoever your banker is and really have an in-depth conversation about the way that your funds are coming in, and find out if there are any treasury management products that could be a good fit for you. I think that there possibly would be. And then, like I said, and on top of that, maybe going to those vendors and seeing if you can put something in place to get them to get those monies to you faster.
I think that's a great idea for sure. Thank you, Ed. And thank you everyone for joining today's webinar. A huge thank you, Marcia, Ed, and Abby, for all of your valuable expertise. I think this is such an important set of conversations to be having, and I really appreciate your time to share your knowledge and your skill set with us today. And everybody who joined, I hope you feel better prepared to assess your situation and set a strong budget for your business for next year. So thanks again for joining, and we hope you all have a wonderful holiday season, and we will see you next time. Bye-bye.